Okay, today's date is July 31st, 2017. I wanted to make a brief update video here on the dollar CAD. I want to talk about something else too. I've been mentioning on the main wall for a while now about the core pricing with Owanda. So this is a live account for the core pricing, and I just wanted to show you guys the spreads that we are dealing with 4 p.m. So it's in the middle of the afternoon. This is the end of the New York session, so spreads are a little bit wider right now than what they would normally be for this account, but you can see the core pricing is way better than what you're going to receive with a standard account at Owanda. For example, the euro odd. In fact, if you go, maybe you don't even know this, but if you go and right click on any of your pairs here and go to spread, it'll show you the spread. Odd CAD 0.8 pips, odd franc 1.7, odd yen half a pip, well 0.8 now, 2 pips for odd New Zealand, 0.3 for odd. So these are tremendously better. These down here are exotics that I don't really trade. I just keep an eye on them, but this is basically your spread right here on the pairs. So much better than what you're going to get if you have a standard account. The one thing I did want to mention too though is with the core pricing, you're getting a half a pip commission on each side of your trade. So the pound New Zealand on a regular account right now is going to be right around 7 to 8 pips of spread, and right now it's between 3 to 4.5 pips. So you're saving about 4 pips, 3 to 4 pips, but you're getting charged 1 pip round trip on every pair that you trade. So like let's say the CAD yen is 0.7. By the time you open and close and pay your commission, you're paying 1.7. You've got 0.7 for the spread, and then you've got 1 pip of commission, half a pip on each side of your trade. But still, that is way better than what you're paying with a standard account that has no commission. So if you're able to get a core pricing account with Owanda, I do recommend it. There's really only 2 brokers that offer decent spreads in the United States that are U.S. regulated, and that's going to be Owanda and TD Ameritrade. TD Ameritrade does things a little bit differently. They have a minimum commission charge, so if you're not dealing with at least a 0.1 or higher trade size, you're going to be paying a little bit more than what you should on commissions, but their spreads are super tight. In fact, I think they may be a little tighter than Owanda's, and again, they have a small commission as well. But that's really the only other option other than Owanda for good spreads and to be a U.S. regulated broker. So I definitely recommend checking them out if you don't need MT4. I've been using MT4 for 6-7 years, so it's very difficult for me to trade without it, especially the Thinkorswim platform is very difficult for me to trade. So I don't use TD Ameritrade. I'd love to use them, but again, because of the availability of the trading platforms, I do not use TD Ameritrade. So my pick is Owanda. Forex.com is your other choice for a USA-based broker, but I can't really recommend them. I've heard a lot of shady things about them. I've never experienced anything shady from them, but I've heard other users have issues with that company, so I can't recommend them. And their spreads are really, really high. In fact, they're higher than what you're going to get on an Owanda standard account. So definitely not a good option if you're wanting tight spreads. Again, if you want the tightest spreads, go with TD Ameritrade or go with Owanda. Again, I choose Owanda because it has MT4 platform. The one thing about the Owanda core pricing, though, is in order to open an account with them, they say you need $20,000. So make sure you have $20,000 in your account or available to place in your account if you're looking to get an Owanda core pricing account. As far as TD Ameritrade goes, if you're familiar with the Thinkorswim platform or it doesn't bother you that you don't have MT4, then you can get an account with them, and it is a $1,500 minimum deposit there. For the standard account at Owanda, I don't think there's a minimum deposit. It might be like $50 or something. But so those are your options as USA brokers. But this is the core pricing. This is a new model put out by Owanda about a month ago. I do like it. It's pretty nice. Saving a bit on spreads, which is really good. They have the same V20 execution technology, which is supposedly the fastest in the industry. So, and that's very important, especially when you have a lot of pairs crashing and doing crazy moves as they sometimes do, especially the pound. But anyways, the point of the video here is I wanted to go over the dollar CAD trade, which I had posted in the last video. So let's see how this thing turned out. If you remember, I did a bit of a video. It was probably, what, 2-3 days ago? Before the weekend. But what I'd mentioned is we had a lot of pushes down on the dollar CAD right here. You can see we just get pushed down after push down. Really small pullbacks, to be honest here. And then all of a sudden we had this big move right here. This move was on July 27th. Today's July 31st. So I saw this move right here. Not only was this a very dramatic move, it was bigger. Like if you look at the past moves here, I do this a lot of times to analyze my pairs. But if you look at this move from here to here, it was less than 2 grid bars. From here, 1, 2 grid bars. From here, 1.5 grid bars. Here, 1.5 grid bars. I mean, your moves are really, really small. This, about 1 grid bar. So your moves up were very, very small. The biggest move up that we had was right here. 1, 2 grid bars. Still a very small move. Notice what happened. Market came back down to retest and actually bounced there, where a lot of these, they just broke down, kept going. But you had a nice little bounce there. Could have made a little bit of money on that. But I don't really trade areas like that. I want a bigger bounce than that. So we have this big long trend going where there's no buyers coming into the market whatsoever. And then all of a sudden we get this massive move up. Again, remember, 1.5 to 2 bars has been the biggest move up we've seen in this entire trend. And this trend has been going since July 12th. It has been basically 2 to 3 weeks of this trend of incredible weakness. So definitely a seller's market here. But what we have down here is we have 1, 2, 3, almost 4 bars on this move up, which is much, much greater than any other move in this entire trend. So it should be at this point you should be thinking maybe there is a change happening in this market, because all of these buyers were able to push price to new highs. Again, this high right here was broken. So not only do we have an influx of new buyers here, but we've broken the last high, and this move was much more dramatic than any other move in this entire trend. And that's really the key here. I really like to compare the moves in a trend. If I see something shift, such as this kind of buying action after the trend has been so weak, there's something to it. And if you look at the higher time frames, like I mentioned in the other video, you're going to see this level down here is major support. It is the base of a major leg up on the daily time frame. And if that level is broken, it could get really ugly for the dollar CAD. So what I'd mentioned in the last video was this. If we come back down into these levels down here, this is going to be a very, very powerful level for you to get into the market for a long, because again, we had massive buying taking place off of this level. This was also a form of a head and shoulders pattern, which is the most powerful type of CRT trade that you can take. So not only did we have a bit of structure here, I call it a structured trade the way this thing's set up, which I just touched on a second ago there, but not only was this a bit of a structured trade, but this was a standard CRT trade with a max move. All of this, by the way, is in the CRT 1 course. But we had a major, major bottom down here with structure. Everything about this was saying it was going to bounce. We were even at a major level in the higher time frames. So I just wanted to throw this video out to show you the end result of the trade. Again, when I'm entering these, when it's a structure CRT trade, I typically enter most of my position at the shoulder level, because that's usually where the markets can reverse. And then I will stagger my orders all the way down to the bottom here. So my loading zone was this right here. This right here is where I'm going to buy the market. And on a structured trade, typically I won't place a trade with a stop loss any larger than 1 bar below. So again, we didn't even hit the bottom of the zone, let alone a bar below, which would have been your stop loss. So you can see that we did rally off of these levels down here. The bottom of this move was right down here at $1.2420. We rallied all the way up to $1.2529. So essentially we've gone 130 pips, and again, one bar below is going to set your stop between, well, if you grab some here, 20 pips here, and about 30 pips from this level. So you could have easily made a 3 or 4 or even 5 to 1 reward to risk on this trade, which is a fantastic amount of money. The one thing that I do want to mention is a lot of times, even though this was a powerful level, and they usually do work, notice the consolidation here. If you get a consolidation that lasts for a really long time, especially a consolidation sideways to this coral right here, the moving average, a lot of times it'll break down. Luckily for us, it didn't quite consolidate that long, but nonetheless, this becomes very dangerous. And when I get a consolidation for an extended period of time, I will quickly as possible try to put my money or my stop loss in the money or at a break-even stop. That way I'm not losing money on the trade. At least bare minimum, you want to minimize your stop loss, because once you put in this bottom and you move up like this and begin to go sideways, markets should not go back below this level. So you should have definitely either exited your trade because of the consolidation or decreased your risk. So again, make sure that your money management is on par, and make sure that you are getting the risk out of the trade as quickly as possible without messing with your reward to risk. So just wanted to throw this video out here to show you the end result of this trade, because every now and then I will mention a trade setup or an idea on my channel here, and I do like to make sure that everybody is aware of what happens, and I kind of like to walk everybody through it so you can kind of see how the market reacted. But that's the dollar CAD trade. Again, this is the 15-minute chart. This is a 15-minute CRT structure trade. As far as the higher time frame goes, we have still been unable to break through these levels up here. This coral is massive resistance on the dollar CAD right now. The daily time frame is definitely indicating there's some momentum trying to kick in down here. So hopefully they can save the market down here, or it could get very ugly. So as of right now, I don't have any trades for this, but if we continue to drop down to these lows, and if we continue to just sit here, eventually this is going to break, because that's a very typical behavior. We need to make a higher swing high here. Otherwise, we're going to be in danger of a breakdown here. But again, a typical behavior for a breakdown on a pair like this is you get a move to the bottom, a bounce, another move, another bounce up, then another drop, and then we just consolidate here. And if that happens, usually it's going to break down. So right now it's hard to say what's going to happen, because we're just kind of meandering around here, but hopefully this thing can gather some strength and begin to head up, because this trend is incredibly overdone. So but anyways, just want to throw this video out today. Hopefully it helped you. If you have any questions at all, don't hesitate to reach out to me. In the meantime, guys, have a great and safe trading week.